July the 24th, and it's a pleasure to have you on Business Morning. I am BC Adebayo. Oil prices are trending higher today on the back of a weaker U.S. dollar, although demand concerns stemming from rising coronavirus cases and escalating U.S.-China tensions kept a cap on prices. The dollar slid to 22-month lows against a basket of currencies, and a weaker dollar usually spurs buying of commodities priced in the greenback like oil because they become cheaper for holders of other currencies. Looking at the numbers now, Brent crude rose 0.55% to $43.07 a barrel in early trade, while US WTI crude rose 0.73% to $41.77 a barrel. Meanwhile, Barclays Commodities Research has said that oil prices could see a correction in the near term if a recovery in fuel demand slows further, especially in the United States. The bank lowered its oil market surplus forecast for 2020 to an average 2.5 million barrels per day from 3.5 million barrels per day previously. And back home now, the central bank and thought leaders in the financial industry have asked boards of companies to step up their game in their drive towards organizational growth and value creation, just as the world battles the coronavirus pandemic. Now, beyond the traditional strategies of a board, the regulator and participating discussants at the virtual meeting call on board members to firm up their advisory roles to management and maintain constant communications. Let's take a listen.
So in this uncertain and volatile economic context, the board and executive management, particularly the CEO, is expected to take on a more prominent role. I think you'd agree with me that crisis situations beg for visible, high-thought leadership with a lot of communication and engagement across the stakeholder value chain: employees, shareholders, suppliers, customers, governments, etc. So the board is actually faced with a lot of existential decisions and critical trade-offs. We have to protect the staff, which is usually the most important asset. Should we give them pay cuts because we're not sure of where revenues will lie? Or should we cut the staff entirely? What should we do about business focus and strategy if our total business model has been disrupted? How do we seek new product and revenue sources to remain a going concern? All the while thinking about corporate social responsibility that has to continue in the host communities, particularly at a time like this, when there's significant disruption and negative impact for everyone. So the traditional board dynamic that regulators espouse actually position the board well to contemplate some of these issues I have talked about. So I want to say it again that, fulfilling all the legal requirements around the board tenure, composition, remuneration, board evaluation, all those very nice things will actually help the board to respond to this situation that requires, deeper thinking. Of course, you would need within that framework freedom of expression. The board has to be diverse in the first place to get, of course, in terms of age, gender, and professional background, to generate the new ideas you need to confront the challenges that are in front of the organization. So it positions the board to survive. But my question remains, does it position the board to thrive? Does it position the board to create an organization that will be sustainable? To remain competitive beyond the crisis, not just to manage a crisis or to survive a crisis. Organizations must move from the board perspective, we must move from focus on oversight and maximizing shareholder value to focus on actively driving growth, innovation, and value creation. So a well-balanced, fully engaged board must have not only a mix of compliance and risk-driven participants within that board, it must have a growth and innovation focus that will position you for long-term effectiveness.
One of the things that is necessary, which we do, is in a few days, our board, 2 days ago was a full board meeting. But in a few days, we're going to have a special strategy session. What is it for? It's for the board and management, again, to sit together, review the strategy we had planned for 2020, review it in line with the reality of the COVID environment, evaluate our response so far, evaluate the critical changes that have happened, and decide together what are the key things that we must do in order to achieve whatever goals we believe are still achievable within the year in the context of the new environment. So it's a highly collaborative project. It's a moment and a season where it is important that the board and the management can work together as a team with one goal in mind.
Now, let's talk about the real estate industry, which has recently been on the radar of the federal government with the introduction of stamp duties on house rents and certificates of occupancy. This is apart from other issues such as the vacancy rate in highbrow areas and the concerns around building permits and building collapse. Well, joining us now to unpack these conversations is the Chief Executive Officer of Beeston Group, Mrs. Becky Olubukola Oke, who joins us from our studios in Abuja. Good morning, Mrs. Olubukola Oke. Thanks for joining us on the program. Tell us, what's your reaction to the reenactment of the stamp duty laws on rents and certificates of occupancy as it relates to the real estate market of today?
Thank you very much for having me. There's a need for reevaluation of a lot of things considering the pandemic, because none of us were prepared for the pandemic. There's a need for reevaluation. There's a need to look at a lot of things. Part of what is going on is the real estate market. There's been meltdown in the business, as we all know. Of course, a lot of other sectors are affected. Coming to talk about the stamp duty, the government have looked at the fact that everybody needs to be part of the building of the nation. The nation building requires every part of everyone, every businesses. And if there's a need for us to start paying stamp duty for the rent, then so be it. After all, people pay agency fee, people pay legal fee and all those other fees before you get an apartment. Beyond that, tenement rate is another issue that most tenants don't want to even hear about. They believe that is an issue for the landlord or the property owners to handle. All of these things are what we call everyone being able to play their roles in Nigeria as it is today. Everybody needs to be part of the nation building. Every individual needs to be able to put their best to it. Real estate business is the surest stimulant for economic growth as it is. Most of the parastatals or most of the other sectors are going through issues. Yeah, we can say that the pandemic affected real estate business, but it's picking up as it is today. It's picking up, and a lot of people are beginning to understand that the best investment they can do is actually to invest in real estate. Especially for us as an organization in Beeston Group, we've been able to create different value chain projects where people can actually see opportunities in investing in properties, investing in real estate, and investing in Beeston Group as a whole. Because our project cuts across the low-cost housing, having to see that people are able to buy, because there's no point building a property that people cannot afford.
Okay.
So affordability for us is key. And of course, being able to spread the payment, being able to give people 5 years, 7 years payment structure, and ensuring that everybody is able to acquire the property as they can or go through the mortgage processes that we have come up with. Because during the COVID-19, one of the major things that has taught us as business owner is corporate governance and being able to restructure and adjust your value chain, adjust your project, adjust what can work, and come up with strategies that can make people, buy into what is this. So if the government came up with the stamp duty idea, I don't have a problem with it. I think it's the right way to go. I think, and of course, the CFO issue. We need to start issuing CFO to everyone. I've always been an advocate for review and reevaluate the Land Use Act. The Land Use Act needs to be reevaluated. And if this is the way to go, we need to look at it. The Ninth Assembly needs to see how they can finish up the Land Use Act, reevaluate it, readjust it, so that every Nigerian is able to have a CFO on your property. Because an investor will not invest without being sure that the title documents to that property or to that investment is right, and which is the certificate of occupancy, which is what most property owners don't have. So if we're looking at new stamp duty charges, we should look at ensuring that if we are paying stamp duty charges, CFO is being issued at the right time. And they should make it a seamless transaction, not necessarily putting for it and you are waiting for, months or years to get, your CFO, okay? Because that is what an investor will look at when he's trying to invest into your business.
All right,
And
Mrs. Olubukola,
knowing
okay.
fully well that nation
I
building
was
is
going to,
key,
Mrs.
real estate.
Olubukola, okay. Yes, sorry. You say that
Yes,
you agree with the government's drive reenacting the stamp duty laws, but many others will also argue that this is not really the best time, looking at the effect of the COVID-19 pandemic on the economy. What would you say about that?
to be honest with you, yes, I agree completely that this is not the right time because the government needs to be sensitive to the needs of the people. There's so much stress in the nation right now. The people are losing their job, businesses are being crumbled. So there's a lot of problem going on in the system. Government shouldn't have introduced this at this time. Okay? When you're looking at being sensitive, they shouldn't have introduced this at this time. Maybe they could have waited a little bit more to introduce this, okay? But like I said earlier, the right thing needs to be done. If you look at other nations, if you look at other European countries, most of these duties that they are introducing to us right now in Nigeria are things that they're already paying across other nations. So they don't even have issue with it because I believe that the infrastructure is put in place. I believe that palliative measures are put in place to ensure that it cushions the effects of the COVID-19 in the life of the citizen. Our nation here in Nigeria, there's a need for our leaders to be a bit more sensitive to the people. Our people knows the right things to do, but I think that we need to introduce the right thing at the right time. We don't just sit, come up with laws or come up with idea and just throw it to the public. When the public are still, people are suffering. There's poverty. COVID-19 has brought more poverty to the nation. There are more poor people in the nation as we speak today. Industries are shutting off. Businesses are collapsing. People are losing their job. What I think that our nation should be doing right now is to look at areas where they can cushion these problems, areas where they can try to bring up palliative measures, bring more businesses. As fund is coming into the nation, we should not be hearing people fainting, people sharing money and here and there. We should be hearing how the nation are putting this money back into industries, building companies, building businesses that can, bring about livelihood, that can promote the other people that are losing their businesses, other people that are in the level where they cannot feed. Okay, so that's why I think that it was not so sensitive of them to bring this issue up. But it is not a bad idea for stamp duty to be charged. It's not a bad idea at all from the angle of our business in real estate. People pay other bills. So I don't think it's really a big deal.
Rate versus the occupancy rate.
A good time. The timing is a bit wrong.
All right, so let's talk about the vacancy rate
Yes,
versus the occupancy rate across the residential, offices, and retail segments, mainly in Abuja, where you are, and in Lagos. Does it bother investors like you?
Well, the vacancy rate or the property rate is very high, highly exorbitant, okay, very exorbitant. That's where I'm going to go back to what I said earlier, that the industry needs to be regulated. The real estate industry is a large industry, and the real estate industry, if it's well regulated, can promote the GDP of this nation to 25% to 30%. It's a strong stimulant in nation building. If the housing development can be regulated and ensure that proper rates should be put in different locations. Your neighbor should not be renting a property for 4 million naira, another person is renting for 10 million naira, another person is renting for probably 2 million naira. There should be regulations in this industry. We have a body called the RIDAN. The RIDAN is doing so much to see how, regulations can be put in place. RIDAN is doing so much to see how everybody can be regulated, properties can be regulated, prices can be regulated. But then, the government have a job to do. The legislatures have a job to do to see that most of these things are regulated There are several empty houses in Abuja that are built and nobody's living there.
And why is
And
that? Why do we have so many houses like that?
150 million.
What's responsible for
It's
those
expensive.
vacancies?
So there's a need to have a rate and regulate it. What we need is regulation. When there's a proper regulation is put in place, people will fall in line with it. But when there are no laws, when there are no regulations, everybody just behave and do whatever they want to do. Everybody just fix a price that is not realistic. That is the problem we're facing.
Now, lately, we've seen the securitization of the real estate investments with instruments such as the real estate investment trust schemes. How has such security helped in hedging for investors?
Well, it's done a massive job. It's been very fantastic, okay? But then I think that it needs to be more promoted. I think more people need to be aware of that. More real estate companies, and the opportunity to be given to companies that are doing well. Companies that are doing so much, companies who are doing several projects, like us in Bistan Group, we have projects across all the states in Nigeria, both in Lagos, in Abuja, and across all the Southwest. We have several projects there. And I think that most of these companies who are doing so much like us should be given opportunities in accessing most of this fund, security fund, accessing developmental fund, so that we are able to do much more. We are a private sector. If the government sector can promote the private sector, partner with the private sector, it makes it easy for investors, either local investors or foreign investors, to partner and to do much more. But when the partnership angle is not there, then you see a private sector or a developer struggling so much to put infrastructure in place, to put proper to build. When you are building, you're also thinking of infrastructure. You're also thinking of securities for the occupants of the estate. There's so much that you are trying to put in place. Sometimes we have to go as far as providing mortgages for these people just to see that we're able to balance the equations for them. But you see, the PPP scheme needs to be promoted across the real estate market. That's the private, the PPP scheme. If the PPP scheme is promoted and the government is partnering so much with a real estate organization or a real estate firm that are already in the market, then you will see that it will be easier for businesses to be done. Some of us who have been in the business, for us in Bista, we've been in the business for over a decade now. It's our 13th year in the industry.
All right.
There's a need for us to be pushed out there, and we've sought the partnership from government, from private sector, state government and federal government to see how much more we can build. The state government needs to do the job of providing housing to their citizens. It is the job of a governor, local government, or whoever that is there to provide housing. When housing problem is solved, I tell you, security issues will be solved. It will solve a lot of security issues. It will solve health issues. Because look at it, COVID-19 is out there. How many people have a good house to stay, a home to stay? You say people should stay at home during the lockdown. Most people could not even stay at home because they don't have a good apartment to stay. There are social houses in other nations. Do we have social houses? We don't. Do we have IDP homes? We don't have IDP homes. And they need to provide IDP homes, not just camp. If you go to places where IDP are living, you will be shocked. They are living under the canopies, suffering. We need to have an IDP home. We need to have a social home. We need to have old people's home. All these homes need to be put in place. And most of the time, government does not need to finance most of this. You can get the private sector to do it. You can get some of these companies to do it as their CSR. And they will provide 1,000 units, 100 units, 200 units across every state. Each state governors needs to look at this and see how you can put this in place. Because when people have a home, their life will be secured. 50% of people's life, 50% of their problem will be solved when they have a good accommodation.
All right, Chief Executive Officer of
Bistan
Group, Mrs. Becky Olubukola.
Yes.
Thank you for sharing your thoughts with us on the program this morning.
Thank you so much for having me today.
Our attention would shift to the birth-year laws amendment when we return in just a moment. Please stay with us. Welcome back. The National Assembly on Wednesday this week passed the bill to repeal the Banks and Other Financial Institutions Act, also called BOFIA. The aim of the review is to reenact the laws which have not been revised since 2004 to reflect latest developments in the financial market and integrate new features in regulatory provisions for the Central Bank of Nigeria. Now, normal legislative processes on the document started with the sponsors presenting the bill for the first reading on May the 12th, while a second reading was made on May the 19th. And that bill, when finally reviewed, will also require passage by the House of Representatives before being forwarded to the President for assent. But how will the review of the BOFIA impact on the markets and promote investors' confidence? Well, let's join the head of portfolio of management at Commercial Partners Asset Management, Victor Aluyi, for some conversations on this development. Good morning, Victor. Thanks for joining us on the program. Talk to us about the current scope of this bill and how it has successfully served as a guide for the industry till date.
Good morning. Thank you for having me. The Bank and Other Financial Institutions Act is essentially the premium legislation, particularly with respect to the regulation of the banking industry primarily, and then other financial institutions such as insurance industry as well. Like you said, this has been a long time coming, actually. I think the first attempt to update this act was mooted in 2018, but the activities there stalled and then were picked up again late last year and have gained significant traction over the last month thereabouts. I mean, in other climes, particularly even in sub-Saharan Africa, the acts that govern financial institutions and banks gets regularly updated, but we haven't had any updates on this since 2004, and you would agree with me that it's been quite a while, and it is important that these updates be done to essentially align it with current realities within the financial service industry and that space, and also to ensure that regulation is out there to strengthen participants and also ensure that the economy at large benefits from it. So I think these are some of the key things that the new bill, if you will, seeks to try and address, particularly in areas of corporate governance, in areas of liquidity management that will ensure that the bank stays solvent, in areas where depositors' funds are also protected. I think these are some of the key areas that the bill focuses on to try and keep it abreast and up to date with current happenings and current realities.
Now, the bill is being sponsored at the National Assembly by Senator Uba Sani, who said on Wednesday that the aim of the amendment is to update and strengthen the existing act to effectively address the challenges being faced in financial services sector and in line with global best practices. What, for you, are the current constraints of the BOFIA?
Well, so just looking at the act and then looking at developments within the industry over the last couple of years, there isn't any clear provisions that cater to areas like financial technology, for instance, which is quite burgeoning and is coming on really strong. There aren't clear regulations there that cater to that industry. There also needs to be some sort of strengthening in terms of areas that ensure that asset quality is maintained, areas that also ensure that the liquidity of banks is also well protected given current events as well. So I think it's just a situation where the bill has to be brought up to date in line with the realities that we're seeing out there. Much more importantly also is the ability of that bill to be able to envisage the sort of things that might happen going forward. So these are key areas that need to be focused on to ensure that we have a robust framework that guides the entire financial service industry.
But one of the things that the bill aims to look at is it seeks to enhance the efficiency in the process of obtaining and granting banking licenses. So help us to understand how this function should differ from the provisions of the Securities and Exchange Commission Act of 2007.
Well, for the provisions of the Securities and Exchange Commission, I think it's important to note that the SEC is the apex regulator for the capital markets. So what the SEC does essentially is purview within the capital market. What BOFIA seeks to do is to regulate the banking, primarily the banking industry, particularly if you look at the areas of microfinance banks, which have come on quite strong over the last couple of years. It's important that regulation, particularly in that area, be reviewed and updated. Like I mentioned earlier, financial technology as well. So for the SEC Act, it basically focuses on capital market operators, while the BOFIA essentially looks at banking. Again, the BOFIA would also provide some kind of framework that ensures that the entire financial services industry is also properly regulated. So I think those are the lines of differentiations, if you will, between what the SEC does with its own acts and then what the BOFIA is also seeking to do.
But the review is also meant to help to prohibit the functionality of non-Nigerian incorporated financial services firms in the country, except under license. But today, Africa is talking about continental integration under the AFCFTA. Should that aspect of the review be given a second thought?
I don't think that aspect of the review necessarily precludes, the investment by, foreign entities in the Nigerian banking space. I think what it basically says is that the entity has to be registered here in Nigeria. So the CBN in its presentation, made mention of the fact that you don't want institutions that are registered maybe in a tax haven and then they want to come and get a banking license here in Nigeria. If you're going to get a banking license, you have to be registered here in Nigeria. I think that's the issue, really. I don't think that it precludes what the AFCA, seeks to do. I think it will still enhance that and continue to also support that. So I don't think that there needs to be a review of that. What it clearly says is that the entity has to be registered here, not a foreign registered entity coming to get a banking license.
Victor, part of the push for the review of the BOFIA is for the central bank to gain the power to manage failing institutions. What will this change in amount to across the industry?
Well, I think that has been an issue for quite some time, although we haven't had any issues with regards to banks failing in a couple of years now. But I think it is something that the central bank has paid a lot of attention to, such that part of what the bill is proposing is a banking sector resolution fund, if you will. The idea is to ensure that in the case where a bank has issues and probably has to go into some sort of receivership or needs some help, the CBN has some framework by way of the resolution fund that would help to take care of depositors, because at the end of the day, that is the key concern, really, to ensure that depositors' funds are safe. So I think the CBN, in conjunction with the NDIC, they are championing that. Part of what it also says is that that fund would also be funded by the CBN, the NDIC, and also the banks as well. It really remains to be seen the specific details of the framework. But again, for the banking industry, that will probably add another leg of expenses that they will probably have to bear with.
One other aspect is the fact that the amendment seeks to create a credit tribunal. But do you think that that's tenable, or for such tribunals should be merged with the existing investment securities tribunal?
I think it is tenable, and I don't think that it should be merged. Like I highlighted earlier, the Investments and Securities Tribunal by the SEC essentially caters to capital market issues, right? Catering to capital market operators and issues that arise within that space. Resolution of issues within the banking industry is actually quite far removed and also significantly different from what goes on in the capital market. So I think that it is important that this be set up to ensure that the process of taking care of issues is streamlined, is put in the proper framework, such that there are any arbitrariness, if you will, in handling that. So I think it's well in order.
Now, let's talk about the fintechs whose activities the future BOFIA looks to regulate and update commensurate penalties for regulatory breaches in the financial services sector. What about the infractions and cyber fraud in the banking system today?
Well, I think the CBN continues to grapple with that challenge and continues to, through prudential guidelines, offer, guidance, if you will, for banks to ensure that these things are reduced significantly and brought to a bare minimum. For the fintech, I think the major concern of the CBN, again, will be to protect, investors or depositors, if you will, to ensure that you don't have an array of, unregistered, unregulated entities going out and taking monies from people. So I think the concern for the CBN would essentially be for regulators to be protected. And it's really key, that the sector is brought under some kind of regulation, some kind of framework is set up there to ensure ultimately that depositors are protected.
Now, talking about the framework now, one of the things it says is that the review will enhance the regulatory measures for single obligor limits, the transfer of significant holdings, and the strengthening of the sanctions regime to make it more deterrent. Tell us, what does this imply for the banks and other industry players?
I think what the CBN is certainly trying to do with this is to create a situation where those MPL issues that we've had in the past will basically stay there. In the past, we've had issues with boardroom abuses, corporate governance lapses that have led to the significant challenges or even the collapse of such institutions. So I think the CBN is looking at strengthening these areas through regulation to ensure that we don't have a repeat of a situation where corporate governance lapses would lead to the failure of an institution, or institutions get bogged down by an MPL challenge. They're essentially looking to increase those single obligor limits, particularly for merchant banks, for instance. They're looking to increase that as well. For the commercial banks, they're also looking to increase that and set it at a pace that is from time to time determined by the central bank, given the realities of the banking industry at the time. So I think these are necessary steps by the CBN to ensure that the challenges that we have seen in the past that had bedeviled the industry and created challenges in the industry essentially stay in the past.
Now, would there be any way that this review will reduce the stress in the banking and possibly help cut down on financial services risks?
Well, I think it all encompasses that, and that's what this bill essentially seeks to do by increasing the single obligor limits, by looking at issues that have to do with compliance, issues that have to do with corporate governance. The CBN is essentially trying to use that to, in its presentation, to make a case for enhancing and strengthening the financial services sector, because they play a very pivotal and critical role in the economy. A lot of people have said that the banking industry has come under quite some stiff regulations lately, and it continues to happen that way because, again, the role that it plays is very critical, and it's important that they are adequately and properly regulated to protect not just the bank itself, the depositors, as well as the economy at large.
Now, I'm sure many would want to know how the review will promote investors' confidence.
Well, I think it's something to share about. What it basically says is that the legislators are abreast of issues, and they continue to work to ensure that the framework that governs the industry is up to date, is in touch with current realities. So I think in that alone, investors can be confident. Again, we remain to see what those specific details would be, in the key areas of corporate governance, the key areas of, risk assets, the resolution fund and all of that. It remains to be seen what the specific details are. Nevertheless, I think these are laudable measures that, if fully implemented in the bill, will strengthen the industry and certainly should, strengthen investor confidence.
Now, just before I let you go, Victor, tell us what will be the gains for financial inclusion?
Well, so, I mean, you're seeing direct, if you will, regulation that is likely to affect the fintech industry. And the fintech industry essentially is the frontier now that serves to drive even most aggressively the whole financial inclusion plan. So clearly, once we see regulation in that area that ensures that people are protected, it certainly helps quite significantly. So I think the effort that are being geared towards the provisions that would ensure proper regulation of the fintech industry would essentially help in channeling and also expanding the financial inclusion plans of the Apex Bank.
Now, but we understand that there's been a stakeholders engagement prior to now. What are the views of industry players on the amendment?
Well, for industry players, I think a lot of the major players have been are up to date. This is something that they expect because every now and then you essentially get guidelines within the prudential guidelines that essentially step up the framework that guides the bank. So yes, it's something that is well welcomed because it would essentially strengthen the financial services sector.
Head of Portfolio Management at Commercial Partners Asset Management, Victor Lee, thanks for speaking with us this morning. Time now for a review of Thursday's activities at the Nigerian Stock Exchange with Edidiong Ewan. Good morning, Eddie. So we saw an upturn at the market yesterday thanks to Dangote Cement.
Good morning, BC. Once again, Dangote Cement shaped market performance yesterday. Now, after the stock declined 3.17% on Tuesday, investors took advantage of that and positioned themselves, pushing the stock up by 10%. Of course, those gains alongside increases from MTN Nigeria pushed the all-share index up by 1.40% to 24,512.27 points. Now, that made the month-to-date return turn positive at plus 0.1%, while the year-to-date loss moderated to minus 8.7%. Investors gained over 100 billion naira in the market yesterday as the equity cap rose to 12.737 trillion naira. Now, we saw about 164.24 million shares worth 2.12 billion naira traded in almost 3,000 deals. Epion Holdings was the most traded stock by volume, while Dangote Cement was the most traded stock by value at 430.51 million naira. On the sectoral front, key sector indices, showed a mixed performance. The industrial goods sector gained 3.26%. Of course, that's as a result of the gains by Dangote Cement, followed by insurance, which ended up by 0.12%. Now, the banking sector declined 0.08%. Consumer goods was down 0.23%, while oil and gas lost marginally by 0.04%. But I'll be talking to Tajuddin Olayinka, a stockbroker at Valmont Securities, for more. Good morning, Mr. Olayinka. Thank you for joining us on the program.
Yeah, good morning.
Dangote Cement was up 10% yesterday. What are the facts behind that figure?
Well, two things might be responsible for that. One, the price of Dangote Cement has actually dropped, over time. I mean, over the past few weeks, and it might also be that investors are willing to take position, on that stock because of the low price. I mean, because of the low share price here. Another thing that I'm sure you are aware of the government intervention efforts, especially this economic sustainability intervention program, whereby government has directed that Federal Ministry of Work to not use bitumen to construct roads, that they use cement. So investors might be banking on the fact that yes, because some of these cement companies will benefit from that program, the 2.2 trillion intervention program of the federal government, just to save the economy from recession. So cement companies will benefit from that, and it's also the reason why investors are actually playing in that space. Another reason that we can look at is also, Dangote is running a share buyback program. So anytime that it is close to doing all those programs, investors might also take advantage of the fact that they are buying back at at higher prices. So they enter at a low price. They need to sell back to Dangote at higher price. So that could also be the reason.
Okay, thank you for that. Ethel Africa has released its earnings, and they're looking impressive, with data revenue constituting 28.0%. How will that shape trader sentiment for the stock today?
I didn't get that.
Ethel Africa has released its earnings, and then we saw data revenue jump by 28.0%. How will that shape trader sentiment for the stock today?
Yeah, what happened to Airtel is not expected from that sector. It's just, it goes to show that during the lockdown, IT companies, especially telecom service providers, benefited from that lockdown because they were renting services and they were more active than many other sectors. For that, we expect to see performance in in most of the listed, especially the Airtel and the MTN, that render services during the lockdown. So going forward, we expect to see more performance from that sector. It also confirms that the global economy is moving into digital age, and so IT companies actually.
Thank you, Mr. Olayinka. Tajuddin Olayinka is a stockbroker at Valmont Securities. That is on the market review. Over to you, BC.
All right, Edith Young, we'll come back to you shortly for a review of the debt and currencies market. Plus, we'll do an opening call to London in just a moment. Don't go away. Now, London is starting off the day with some relatively positive news for the high street after fresh data showed that the easing of lockdown in England last month helped UK retail sales beat forecasts in June. Let's talk to Juliana Olayinka for more details of that. Good morning, Juliana. So the Office for National Statistics has reported a 13.9% month-on-month rise in UK retail sales last month, which easily exceeded expectations for an 8% uptick. What were the driving factors?
Good morning, Busy. Well, the driving factors were the fact that the shops were open. There's been an increase in footfall. I believe Brits, who are being dubbed the most coronaphobia nation in the world, were finally feeling that it was safe enough for them to go outside. And of course, this has been reflected in these pretty positive June retail sales figures. I've got to say, it hasn't moved the FTSE. The FTSE is suffering from a triple-digit loss this morning, down by about 100 points, even though we've also had, on top of the positive retail sales figures, positive PMI figures in July, the index positive figures of 57.1 for the composite PMI, which includes manufacturing and services, and that's up from 47.7 in June. But the FTSE is still down. Going back to those retail sales figures, Bissy, even though they are positive, up by almost 14%, it's still down by about 1.8% from the same period last year. And there are some economists that say, you know, people should hold up a little bit. It doesn't mean that the economy is still bouncing back in that V shape that everybody's hoping for, because retail sales only account for about a third of household spend. And also because hospitality wasn't exactly open in its fullest last month, a lot of people are allocating funds that were to be for services in the hospitality sector to retail. It's also worth noting as well that the vast majority of these sales figures are online and not in the high street, which of course Britain is so desperately hoping they can increase those numbers.
Now, mandatory wearing of face masks begin today in London. Tell us, what's the compliance level as of this morning?
Well, I'm not sure yet because I've been stuck in the studio, but so far so good. When I was on my way in, most of the shops were closed, so I didn't see many people out and about wearing the face mask. And of course, one of the most important points that the government have made is when you're out and about in an open space, you don't have to wear the face mask. It's when you're in a enclosed space. I went to get my coffee this morning and everybody, including myself, was wearing a face mask in the store. And I think that's what's really important. It's about people taking responsibility for their own health and safety, wearing the face mask on their own. A lot of shoppers, including some of the big shops like Sainsbury's and Asda, have told the government in no uncertain terms that it's not for their assistance to be policing people to wear masks. They will encourage them on the way in. Will they be sending people away? I'm not so sure about that because, of course, everybody wants to increase their numbers. Over the past couple of weeks, the government have been named and shamed because many of their ministers that have been doing early morning TV have all said different things about where you should and where you shouldn't wear a face mask. Of course, you can't wear a face mask in a gym. You can't wear one when you're eating at a restaurant or you're drinking beer in a pub, but you must wear them now when you're going to get a takeaway. So absolute clarity and transparency on this face mask wearing is vital if it's going to be a success. If you don't wear a face mask, you will be fined £100.
Wow, but what's most important is that everyone stays safe this period. Oh, the UK government plans to develop a £100 million COVID-19 vaccine manufacturing sector. What more can you tell us about this?
Well, yes, this is a part of Boris Johnson's Conservative government's aim to be one of the world's leading vaccine finders. So they are building this £100 million state-of-the-art vaccine centre. It will be in Essex, which is just in the east of London. It's not going to be ready anytime soon. Won't be as fast as that 72-hour build of the Nightingale Hospital, but it will be ready by December 2021. That's what the government are aiming for. And really, this is so they can scale up the production of vaccines. They're really hoping that the University of Oxford's vaccine is going to be one of the world's leading one. The government have already pledged to spend 100 million, to purchase 100 million doses of the vaccine if it is successful. And also as well, we do know that a second wave is potentially coming to Britain. There's been talks about making flu jabs more accessible so that the NHS is not overwhelmed in the much colder months, which will be coming in a couple of weeks' time. So the government want to be prepared. Of course, they failed miserably in trying to stop the fatality rate in Britain. We're currently the third highest in the world. And so if there is going to be any future pandemic, the British government want to be sure that they have a scale and a production line big enough and equipped enough to make Britain come off less worse than it has during COVID-19.
Thank you, Juliana. We'll see you again in the afternoon.
Thank you, Bissy.
And it's back to Edidio for a review of the debt and currencies market. Over to you, Eddie.
Thanks, BC. The bond market maintained its relatively bullish momentum in Thursday's session as the unmet bids at the auction, coupled with robust system liquidity, spurred buying interest across board, particularly on the long tenor maturities. Now, yields declined by 15 basis points on average. On that counter, we saw 34 deals worth 14.01 billion naira. Now, the Treasury bills market was mixed, although with bullish sentiment as average yield powered by 1 basis point to 1.7%. Now, despite that, the market was quiet as we saw just 2 deals on that counter. The Omo market was bearish yesterday as average yields expanded by 5 basis points to 5.0%. Now, selling pressure was seen across short-term maturities. We had 24 deals worth 20.55 billion naira. Nkem Azinge, a fixed income dealer at UBA, will be joining me now to talk more about the fixed income market. Good morning, Nkem. Thank you for joining us on the program. Okay, I'm being told that we do not have Nkem yet, but let's just quickly look at the NASD OTC market. Now, that segment of the market was unchanged yesterday. We haven't seen a lot of activity in this segment of the market this week. One day the market is up, the next market is down, but yesterday that market was unchanged at 706.52 points, with the market cap at 518.99 billion naira. Now, activity level was also really low. We saw just 28,315 units worth just 961,330 naira in 7 deals. Well, that is on the market review for the week, BC. Hopefully, today's session will end positive and we could start the week on a positive note.
We hope so. We'll always hope for a profitable trading day. Thank you, Edidio.
Thank you, BC.
And just before we go, let's just do a quick recap of latest developments coming from the crude oil market. Of course, this morning we saw oil prices trending higher today, and that's on the back of a weaker U.S. dollar, although the demand concerns coming from the rising coronavirus cases and the escalating U.S.-China tensions appear to keep a cap on prices. Well, the dollar slid to 22-month lows against the basket of currencies. And what happens is that a weaker dollar usually spurs buying of commodities priced in the greenback like oil because they become cheaper for holders of other currencies. Brent crude rose 0.55%. Trading at $43.07 a barrel earlier on, and U.S. WTI crude rose 0.73% to $41.77 a barrel. Meanwhile, Barclays Commodities Research has said that oil prices could see a correction in the near term if a recovery in fuel demand slows further, especially in the United States. The bank has lowered its oil market surplus forecast for 2020 to an average 2.5 million barrels per day from 3.5 million barrels per day previously. Of course, we have our eyes on this market, and we will continue to update you as the developments come in. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.